Hi, welcome to the video today. It's the 2nd of November, it's Wednesday. In today's video we're going to be looking at trading high impact news. Now in relation to this we're going to be looking at the British pound and how it might react to the Bank of England meeting tomorrow. Now in terms of pairs we're going to check out, they're going to be the GBP against the USD, CHF, AUD, CAD and JPY. We'll go to the charts in just a moment. Now in terms of the strategy we use to trade high impact news, we've got a view before the meeting comes around. We will not just respond to price action. So our order will already be in. We're going to work out what the market is anticipating and are they going to be disappointed, and then just use big levels of support and resistance to get into the trade and manage our stop. Now in relation to this strategy, it's just really using sentiment and just simple technical analysis. So what we're going to do is look at the techniques and the pairs. So we're going to do that right now. But just before we do so, if you want to learn all our trading techniques, check out our strategy and also our daily technical sentiment analysis of 14 FX pairs. All you need to do is go to the link beneath this video and you can get live access to our member, which will shortly end. We'll be going to an annual subscription so you can lock in live access now if you wish. Now in terms of also beneath this video, join our free mailing list, check out our Facebook page and also join our Facebook group of traders. Right, let's go over and take a look at the opportunities. Right, on GBP USD, I'll just quickly review the fundamentals. I'll do the technicals on this chart and then the others. Okay, now in terms of Bank of England, written some notes. It's got a balancing act. It's got to cool inflation and try to avoid a sharp downturn in the economy. And the economy is already going down in the UK. The numbers are poor, okay? Now, a huge majority believe the die is cast. That's people in the UK. And a recession next year is now unavoidable. I think it is. So the Bank of England have got to be very careful with interest rate hikes, in my view. Now, in terms of they're expected to deliver 75 basis points at this meeting, that's in the price. We think a smaller hike of 50 basis points could be the outcome. Okay, that would be better for our view, of course. But in terms of the Bank of England, regardless of a 75 or 50 basis point hike, they're going to be cautious. Okay, I think they really want to take a wait and see attitude to inflation. They know that it's a supply side shock that's caused inflation, i.e. the energy crisis and food prices, and raising rates isn't going to really have a significant impact on that. Okay, interest rate hikes normally work best when you're going against excessive demand or whatever, on the consumer side, not on the supply side. Okay, so I think that they will be cautious. Now, in terms of markets, they're looking for rates to rise 6.5% 2023. That's unlikely due to the state of the economy. Really crush it if you had rates up there. And also the housing market, which is so important in the UK. Okay, now in terms of the pound, Bank of England decides since the mini budget debacle, which was over here when the government came up with the idea of doing a budget with unfunded tax cuts, yet pound really sell off. But since then it's mounted a rally of about 700 pips. Okay, that's really just basically on relief that the government didn't pursue the mini budget. None of the fundamentals in the UK, big fundamentals, have changed. Okay, now in terms of on the USD side, we do have the Fed today. We're looking for a hawkish Fed. Dollar a little bit oversold in our view. If we get a dovish Fed, you won't get into this trade. Okay, but I'm looking for a hawkish Fed. And in terms of the price action, it's pretty simple for us. You've got resistance up here. Okay, so basically a round number is always important at 116. Just see we managed to get above here, 3 bodies, and then we came down. Okay, now just trading in low volatility. Now, in terms of the way I think you could get into this pair is to go through a big round number. And the big round number is going to be 140. Okay, so if we go through 114, I'm looking for follow through to the downside. Now, in terms, if we look at the price action, you've got tail there, then you've got basically 4 lower highs. So for me, on a break lower, the stop doesn't have to be behind 116. You can just go behind those candles there. If we go to the downside, I'm looking for a move to here. Okay, 109.50, possible run on towards the 108 level. But I think 109.50 is certainly on the cards. So I'm just trying to get my line straight. There we go. So there's the risk. You've got just, what is it, about 4 to 1 to this level here. Obviously more to the second level. You could, if the pound does rally up towards the 116 level, you could look for topping action up there. The pound, in our view, overbought. So we'll see what happens with this pair. Now let's go and look at the crosses. Right, this is the first cross, and I'm just using the charts from our member centre. Now in terms of this chart, yen very oversold, poked the 172 level. We just sold through the 170 level, a little bit lower as of this morning. Now in terms of this move, okay, we've since moved a little bit to the downside, so just give you my views on coming in on it now. You've got support here, okay, of 168. You can see the big blue there, tail there, and obviously some candles over here. So I'd go through 168, okay, stop can then be popped behind the 169 level. So behind these bodies, I'm going to say 169.30, then look for a run down to 164, then 162. Okay, so that's where we see that one. Let's go to GBP AUD. Big blue, rejection, tight channel. This one's simple. Just go through the support here. You've also got 20-day moving average, which you like to see break. I don't think you need to wait for the round number in this one. I think get through here, 20-day will be straight to the downside. Are we doing anything this pair this evening? I don't think so. GBP AUD. No, still hanging around waiting for the breakout. Next pair. This one's already in motion, so I wouldn't actually try this one, but this one's actually working out okay for us. It's a few hundred pips, but it's moved a bit too much to come in fresh, I think, in terms of I think the CAD and the AUD are better in the commodity currencies. Again, strong move up, reversal down here, you're trapped in a channel, so just go through the round number. Okay, so 155.80, and then you stop back behind this red body, 20 pips back from it. Okay, so 157.60 is our stop. Next pair, last pair, GBP CHF. Mentioned in videos before, I really like the look of the CHF from a longer term perspective. I think it's going to be the strongest European currency. Healthy economy, not too much inflation, and it's a safe haven. Again, very simple. You've got big round number here, secondary, another resistance level here, low volatility, just through these bodies here. You could wait for the round number. I think the bodies here and the tail are enough. Then look for a move down to 109.50, then 106. Not sure what this one's doing tonight. Let's have a look. GBP CHF. Not much. So basically waiting for a break lower. Now, in terms of just using big round numbers, big levels of support and resistance, and you can keep your technicals very simple. You need to do a judgment of the sentiment towards the fundamentals, though. That's the key. That's what keeps the technicals simple. I think pound rallied too far to the upside, and the Bank of England will disappoint. We shall see. Right, that's the video for today. Hope you found it useful. Thank you.